Hey everybody, good weekend. Here is your weekend market minute for Saturday, the 17th of February, 2024. I am looking at a weekly chart here of the S&P 500, and certainly we're in yet another bull market after we went through the 2022 bear. So it was a relatively standard off-the-shelf bear market that was good for more than 20%. And lasted about 18 months before we broke into new highs and changed polarity. And we went through a little bit of end of the year corrective move. And from that, we've jumped over 900 points to the downside. Now, the question is, where's this going to end? How high is this price going to go before we'll see some really meaningful resistance and perhaps the next bear in line? Now, of course, we don't know that. I don't know that. And it's kind of funny when you step back and look at the analyst community, because every year they wrap themselves around the axle trying to figure out what the S&P 500 is going to be at the end of the year. And they always get it wrong. What I'm here to do is not to predict the future. What I'm going to show you is just a couple of different analysis techniques for projecting what a possible price level might be based on price behavior in the past. Now, before you fill the comment section with all kinds of opinions about fundamentals and why the price deserves to be down at S&P 600 and why this rally is destined to fail any day now, just remember that markets climb a wall of worry, and every single one of these that went on for hundreds of points was among the most hated bull markets. Every single one of them was. And I'm sure that this one is as well. So check your opinion at the door. All we're going to do is we're just going to use some standard technical techniques to understand where a possible top might be for the S&P. The first one I'm going to use here is just standard chart patterns. So what we're looking at here is likely, and again, this is very subjective, but this looks to me like a cup with handle pattern. Now, most cup with handle patterns, I'm used to seeing them have the same level. The neckline is almost horizontal like this. And then you watch it break forward, and the projection for this is the depth of the cup from the neckline down to the bottom of the cup level. So you forward project that same distance to the upside. So what we're going to look at doing here is using this as the neckline. So using a standard trend line, what we're going to do is we're just going to draw this trend line in here and then draw another trend line from the bottom up to where it intersects with this trend line. Now let's go ahead and make this one a little bit bigger so we can see it. Let's make it wider, fatter, and just a different color so that we can track this thing. Okay, so what we're going to do now is we're going to bring this up to the breakout level. So everything is approximate, but what it's showing here is that our target for this big cup with handle move is up around 5,800 or so. Okay, so that's technique number one. So that's basic chart patterns and using a forward projected price, the measured move of the cup with handle pattern. Now, the next technique I'm going to talk to you about is fib extensions. And this one's kind of interesting because it depends on how we want to use this. So here's my tool, Fibonacci extensions. And the first one I'm going to pick is the smaller of the two. And what I'm going to do is I'm going to go from the bottom of the swing. So this is last October in 2022, actually the previous October in 2022, up to the highs in June, and then down to the bottom of the retracement, which was the end of October in 2023. So you can see now that we have projections for this. 100% of that would be up here at 5,200. And so a lot of times what we'll see is most people are looking for somewhere between 138.2% to 161.8%. So a lot of folks are looking for this as a target. And you notice that that white line that we drew for the measured move target from the cup with the handle pattern, falls right in there. So we are looking for somewhere between maybe 5,600 up to 5,900 for common fib extensions. So is that going to be the end of this bull market? Are we going to die from there? Is it going to lead to the next bear market? I don't know. This is just one way to look at things. Now, what's also interesting is if we take the bigger fractal here. So if we take the big move here and we take this one from the 2020 to 2021 and then drag that one down, you can see that we're nowhere even close to fulfilling the promise of this potential move. And if we look at that, we can see that these ones are up here. We're talking about somewhere like 7,000 to 7,600 level on the S&P. So again, I am not here to debate that. All I'm showing you is a technique that's part of charting. It is not my opinion as to whether or not we can get up there. It's just something that you lay on the table and you ask yourself, is it possible for the price to get up there? What would have to happen for me to stay into a trade all the way through up to those price levels? And remember, folks, the sooner that you part with your opinions about what the price can do or should do or will or won't do, the sooner that you'll start to keep more of your fair share of profits. Remember, analysis like this is not here to predict the future. It's about giving yourself tools so that you know what to do based on what the price is actually doing. Now, given all that, I can actually make the case in the short term that we may have a difficult half of the back half of February. I think we're in a position where I think it would be good for the charts to actually take a rest for a couple of weeks before setting themselves up for the next move. All right, folks, that is it for today's Market Minute. Hope you have a great long weekend. We'll see you in the next edition.